NVIDIA, Jim.
What are you going to say?
The
Negative?
greatest
Go ahead, say something negative. Go ahead, say something
ever made in history.
Thank you for that.
Is up 2.5%.
Well, look, NVIDIA to me is the winner every single time. If you go into a data center, you don't see Intel, okay? You see NVIDIA everywhere. And I went into one of InTrader's, I went into one of his data centers, CoreWeave. I mean, look, CoreWeave's real, okay? It's real.
Ooh, Intel's getting a hit a little bit today.
Well, I mean, yes, they didn't get some. What, people think that there's going to be a takeover there? No.
Intel, Deutsche goes to 30 from 23.
30.
There was DeepSeek announced a new model where the API costs come down. Huawei, this report that they're looking to double their shipments of AI chips in the next year.
Is that one reason why BABA shares are up another 4.5%?
They also know it's recommended.
Because they're going to be a beneficiary.
They got a recommendation.
Recommendation.
I think that what happens is the president should be watching our show and he should say, listen, I don't like the fact that Huawei's doubling. We could get in there. Everyone would build on our own company, which is NVIDIA. We would know everything China's doing if we wanted to. But no, we're letting these guys take over. We're letting Huawei win the Sputnik race.
What's happening is they're searching for some leverage at a time where the Chinese have taken their soy purchases to zero.
I think you're right.
Right?
I think you're right. I think that the leverage should come from the fact that we're a great nation. Who are they? There's the leverage.
NVIDIA, let's check it right now. NVIDIA is not at the highs of the day, but it was up better than 3%. It's up 2% now. The target goes to 220 from 205, reiterated by Jefferies. Chips across the board today. NVIDIA, Micron, AMD, Broadcom, they've all been higher. There are other names you could point to as well, but that's where the action is today.
Yeah, and Jensen this weekend was on one of your besties podcasts, Brad Gershner. I highly recommend people listen to it. And when, Jensen's talking about not the billions, but, trillions, which is a crazy number because a billion seconds is 32 years and a trillion seconds is 32,000 years. And so while I've always said Jensen is the master salesman, at the same time, he's delivered the goods. And I think if you can get past the circular financing that's happening with an Oracle and an OpenAI, which I don't own either one, I think that you still feel like the spend is massive. And to me, as long as, the hyperscalers or cloud service providers don't do an Oracle and go negative free cash flow, which I don't think they're even, that would be like almost impossible at this point. I think we're good. I think if we continue to see this, strange financing, I would get more concerned. But as long as it's still going to settle around Oracle and OpenAI, I think the NVIDIAs, the Broadcoms, the Vertivs are just going to continue to move much higher.
Weiss Bernstein, I think, sums it up pretty well. You do have huge numbers being thrown around. It makes some people concerned. It's almost in a bit of disbelief, the level of investment that you're having from these various businesses. But they say, demand looks off the charts. That NVIDIA's OpenAI deal and Broadcom's new 5-year target suggests we still may be early. And we're hard-pressed to think of a better use of NVIDIA's cash flow. At this point, they argue own both, NVIDIA and Broadcom. Don't pick between the two. And others would probably say, yeah, own those two and.
Yeah, look, I mentioned this last week. The valuations in the public markets pale in consideration and relevance to the private markets. So you take a look at companies like NVIDIA, for example, investing $50 million in this robotics company, humanoids, that didn't have a prototype. They just did a round a year and a half, 2 years later, that went from $500 million to $38 billion and still don't have commercial revenues. So that's kind of bizarre. So look, I think that there will be a lot of overspending and there will be a lot of companies that won't succeed, that will go by the wayside, maybe not to the extent that we saw in the dot-com bubble, but right now the momentum's going, and this is such a game changer that it's going to continue going for a while. Now, I think where the biggest risk to the economy is in the people that don't make a lot of money, that live paycheck to paycheck, because those aren't necessarily very skilled jobs. And that's a big part of the economy. And we've seen that. We've already seen them under pressure over the last 6 months. However, the upper ends of the economy, working in the engineering positions, professional positions, even though they will be under pressure, are carrying the economy. That's where all the spending comes from. So those to me are sort of like the worry points. When do you tip the edge? We're seeing bankruptcies pick up in some of the private credit. So those are all warning signs, but I think we're going to keep going. And when they hit, they're going to hit hard.
That's a front page story of the Journal today about, some of these bankruptcies and what's happening in the credit markets. Maybe it looks great, maybe too great. Howard Marks made some interesting comments in that article as well. Is history in danger of repeating itself, or at least rhyming, as the current AI craze has some harkening back to the dot-com crash of the late 90s? Too many stocks up too far too fast on the promise of riches down the road. We all know how that ended. Gene Munster, managing partner with Deepwater Asset Management, joins us now. How do you think about that question? Are we at least rhyming?
Well, I'm always looking for the rhyme, Scott. Of course, we're never going to see it perfectly mapped to what happened 25 years ago. But I want to first kind of mark where we're at, mark the moment here. This is a big week. That since GPT made its debut in November of 22, the Nasdaq's up 100%. Typically over that period, it would be up like 25%. So this conversation is most appropriate. And the reason why these bubbles happen is outlandish behavior starts happening from investors. And this comment that I'm going to make may fall into that category for some people. Is that a few months ago, I thought we're in the third inning of the AI build out, the AI trade. Now I think we're in the second inning. And that's based on what we've heard from the big CapEx, the big spenders, hyperscalers after the June quarter. And also more recently from Zuckerberg and CFO Susan Lee at the Goldman conference, and from OpenAI, Oracle, NVIDIA, all that put together. Scott, I think there still is a massive amount of investment. I think that investment will lead to these valuations going higher. One other piece about the rhyming part.
No, go ahead. Go ahead. Nope. Go ahead, Gene. You paused. I thought you were done. Please go ahead.
Right on. The rhyming part, one more on this rhyming part, is I think one piece that we're going to see is these companies that are so loved by the AI trade, the private companies, whether it's OpenAI, XAI, Anthropic, Anduril. None of these are public yet. None of them have seen this crazy public euphoria around it. And so at a very high level, it's hard for me to imagine that we're at the end if, in fact, we haven't seen some of these biggest companies have their breakout period in the public markets.
So you mentioned the NASDAQ up 100% since November of 22. We looked at some of the groups within the AI story. The hyperscalers, the Googles, the Metas. Meta's up 579% since November 30th of 2022 when GPT was announced. NVIDIA's up better than 1,000%. The so-called others of AI love. Dell's up 200%, Oracle 250, IBM is almost a double. The power companies that get a lot of love, utilities that are now modern day growth companies. Vistra 725%, GE Vernova up 355%. It's why Ken Griffin probably said what he did on CNBC last week. I want you to listen.
There's obviously echoes of the dot-com bubble in this moment. All right, and let's take a step back. The dot-com bubble, there was a huge amount of capital that flowed into what today we refer to as the internet. Now, the true winners and losers were not readily identifiable at the start of that whole bubble. But move forward 10, 15, 20 years later, there's no doubt that the world was radically transformed by that moment in time.
It's interesting when he says, quote, now the true winners and losers were not readily identifiable at the start of that whole bubble. Have we decided that we know who the winners and losers are this time, or the ones that we think? And they're the names, the very names that I read off those lists to you?
I think they've been a winner. I think that there's a whole nother class of companies coming, these AI first companies. There's a handful that I mentioned, those 4 that I mentioned that are at the top of that shelf, kind of this golden list. But we spend time in our venture business and look at these other kind of emerging companies, and they will be, I think, a whole battery of $100 billion plus companies that most investors don't know about. I think this it is important to focus on kind of how narrow that trade has been, like you just described. But if in fact the impact is as big as I think it's going to be, then it's going to kind of spread out. I go back to Walmart's CEO comments last week saying that AI will impact literally every job. And I pause and think, like, how many jobs are being impacted by it today? And the answer is few, very few. And so when I think about, the class of companies, I do think it's going to spread out. I think you're going to see better performance more broadly with some of these smaller companies over the next 1, 3, 5 years. I also think, again, there's this new class. We haven't seen them. We've seen a few of them, CoreWeave, Reddit, but we really haven't seen the private class. And those are the companies that are growing. If you take OpenAI, $2 billion last year, 13 this year, 26 next year, expected to be 200 by 2030. Like, that is the exciting part. And so I think until we get to that kind of that breathtaking, investors can really get a solid eye on that. I don't think they're at the top. One other piece I want to mention, this is really healthy for the market. The conversation about the bursting of the bubble is, of course, healthy for the market. I remember being an analyst back at Piper Jaffray in the mid-late 90s and thinking this is going to go on forever. Like, the concept of a bursting bubble just wasn't in the conversation. And I think because that was such a painful moment, I actually don't think we're going to get like a spectacular, I've described that in the past, a spectacular bursting. I think what will happen is we'll get a move in the market for the next 3 years, continued massive outperformance. But then I think it's more or less going to be more of a dip or kind of a steady, a leveling off versus this big blow up that everyone's expecting.
But we talk about a monolith of tech, but it's not.
Sure.
Right? There's the AI trade, which I have grown increasingly concerned about and have reduced my exposure. Collars and NVIDIA put spreads, Oracle put spreads, even short CoreWeave now. It's not a commentary so much on CoreWeave, just that it's sort of the poster child for data center growth. I feel like I know that will grow over time, but that doesn't mean the valuations right now are where they should be. And I think it just seems bubblicious to me.
Okay. Right. In terms of the build out of U.S. tech and data centers, are we getting into that period where we are looking bubblicious? I mean, it strikes me that just in the past couple of days, week or so on the street, there have been a couple of notes saying, are we in a bubble territory? I mean, like, when I see that sort of parade of stuff coming into my inbox, and I'm thinking, wow, people are really thinking about this.
Yeah, and the question is definitely coming up. I think AI power gen and that trade is probably the thing we have the most confidence in, frankly, from a Sharpe ratio perspective. To be fair, though, yeah, I mean, there is a lot priced in right now. People are, I don't want to say over their skis, but it's a pretty aggressive trade. And I think last time I was on was when Oracle reported, right? And the conversation there was great revenue forecast. They're not going to be able to find the chips and the energy to actually get there. So it's tough. I mean, the tactical valuation might look high, but if you believe that narrative, then you're probably earlier innings in that trade than you previously thought. So yeah, AI power gen is a theme we're still pretty strongly behind.
The linchpin is, of course, NVIDIA. Right now, these AI platforms are replacing code writers. They're taking the place of some jobs, and like Walmart announced, this weekend, moving people to other roles while holding the total number of employees steady. But there has to be much more to justify all the money that's being spent on these chatbots. The ChatGPT Shopify partnership needs to be one of hundreds to make the whole build out worthwhile, but there could be hundreds. So should we take the dot-com bomb scenario off the table? Oddly, I don't want it to be taken off the table. See, the skepticism keeps things in check. If there weren't such a negative bent to the story right now, everyone would be in this pool and we'd all drown. Here's the bottom line. Speaking as an internet pioneer, what I see now is the polar opposite of what we were seeing 25 years ago. When the dot-coms made bad investments, nearly all of them went under. But worst case scenario, if Google and Amazon and Meta make bad investments and take big losses, that's just another day at the office.
All right, I hope you're all doing great today. I'll very briefly say that if you didn't see this past weekend's video of Iron CEO, I encourage you to watch that video on the channel. On a percentage basis, Iron is probably the stock I am most bullish on over the next 1 to 2 years based on everything I'm seeing at this current moment. That does not mean that the stock is going to go straight up. There will most likely be pullbacks along the way. But I encourage you to watch that video on the channel and then research Iron because I genuinely think there's a lot of upside over the coming years. Now let's talk about NVIDIA. Last week, Jensen appeared on the BG Square podcast, and I'll just briefly mention a few points that stuck out to me. Jensen clarified that the recent recently announced $100 billion investment in OpenAI is purely a business decision to generate a great return for shareholders. OpenAI is not required to purchase NVIDIA hardware, and Jensen believes the return on the OpenAI investment will be fantastic. Jensen said he thinks OpenAI is likely to be the next multi-trillion-dollar hyperscale company like a Meta or a Google. ChatGPT is the fastest growing software product in history, with roughly 800 million weekly active users, and the investment was purely NVIDIA trying to generate a great return on that capital for shareholders. It's that simple. This is a straightforward, pragmatic decision by the largest company in the world to put some of their profits to work in order to generate a greater return from that capital for their shareholders. NVIDIA did not need to make this investment, and people should not be tripped up by the idea of vendor financing. OpenAI is not required to buy NVIDIA hardware, and NVIDIA expects this investment to generate a fantastic return. Jensen also said that he expects the insatiable demand for compute to continue for the next few years, and that most people are still drastically underestimating what will be needed in the future. Jensen said that we have two exponential curves of growth: the exponential growth of AI usage and the exponential growth of AI's improvement. Both of these growth curves are compounding the need for more compute. In other words, we're nowhere near any type of bubble bursting type of event, not even close. Jensen also reiterated his view that even if competitors were to give away their chips for free, it would still be a better option for companies to buy NVIDIA systems because the performance per watt from NVIDIA systems is so good, and that greater performance directly drives higher AI revenues. In other words, what's the point of paying for a cheaper alternative if it leads to lesser revenues? Now, as I've said in the past, I think there is plenty of room in this market for other companies like Broadcom and AMD to succeed as well. At the same time, that does not change the fact that NVIDIA systems are by far the best general purpose option available today. Jensen also spoke on the topic of NVIDIA's current valuation, indicating that consensus estimates are substantially lower than the reality of what will occur. On this topic, Jensen phrased it by saying, quote, "Our opportunity is much larger than the consensus." As I've been saying for a long while now, I seriously think that most analysts are underestimating NVIDIA's long-term growth. As AI models improve and as new use cases are developed, the need for compute will drastically increase. And then add on top of that the growing demand for AI from businesses, consumers, and sovereigns, and the need for additional compute is even greater. As for today's NVIDIA news, Bloomberg is reporting that Huawei is to double their AI chip output, as Chinese regulators are still not allowing NVIDIA to sell H20 chips in China. I think the administration is likely to eventually allow a better chip than the H20 to be sold in China in an attempt to keep Chinese developers building on the American tech stack. If NVIDIA is allowed to sell a chip in China that is substantially better than the H20 and substantially better than the domestic alternatives, then I would be surprised if China were to reject that chip as well. They may reject it initially in a show of strength type of move, but I would expect them to eventually allow it into China if it is substantially better than both the H20 and domestic alternatives. Regardless of that, NVIDIA's business is accelerating even without any China H20 sales, and therefore any China revenue would represent additional upside to what is already a solid long-term setup. Looking ahead, we have NVIDIA GTC in Washington, D.C. this October, with a keynote from Jensen Huang scheduled for October 28th. Whenever Jensen gives a GTC keynote, he usually announces large-scale projects that are unique to the region where the GTC event is being held. Since this GTC event is being held in D.C., I wonder if we will get any announcements of sovereign AI deals with the U.S. government or large-scale projects with U.S. companies. I also hope we'll get an update on NVIDIA's progress in quantum computing at this event. And Jensen said on last month's earnings call that he is anxious to share more details about Rubin with us at GTC. As a reminder, Rubin is on track to launch in 2026, and it is the first NVIDIA architecture wherein every single chip is new and revolutionary, co-designed to deliver a massive increase in performance. I think most analysts are not only underestimating the growth of NVIDIA's data center business, but I think they're also massively underestimating the long-term growth of NVIDIA's physical AI business. With physical AI, we're no longer talking about AI agents that complete digital tasks on your behalf. We're now talking about physical AI agents that will complete physical tasks in the real world. Physical AI is likely to be the biggest wave of AI yet, and NVIDIA is actively establishing themselves as the underlying foundation supporting all of it. NVIDIA sells the systems where the AI models are trained. They provide NVIDIA Omniverse where the models are taught and tested, and NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX. From the hardware in the data centers to digital twins in Omniverse to the hardware on the robots, NVIDIA provides it all, and they're establishing themselves as an indispensable foundation to physical AI. Over 2 million developers are already building on the NVIDIA robotics stack. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is a massive growth opportunity for NVIDIA that does not get enough attention. In addition to physical AI, we also have many other large growth opportunities that NVIDIA is really just starting to capitalize on, including sovereign AI, enterprise AI, which Jensen believes is an opportunity worth hundreds of billions of dollars, many AI native startups, and quantum computing. Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. Jensen also told us that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they're now going to do the same thing with QPUs. Again, this is another large growth opportunity that doesn't get enough attention. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.